The trade war between the United States and China has been a simmering pot for years. It has now boiled over. Both countries have launched new tariffs. These tariffs are taxes on imported goods. The situation is complex. It impacts businesses and consumers worldwide. The trade war began in 2018. Former President Trump imposed tariffs on Chinese goods. He aimed to protect American jobs and reduce the trade deficit. China retaliated with tariffs of its own. The conflict escalated under the Biden administration. This year has seen a dramatic surge in tensions. The U.S. raised tariffs on Chinese goods to 145% on April 9. This action triggered a swift response from China. The Chinese government announced a 125% tariff on all U.S. goods. This escalation has sent shockwaves through the global economy. The trade war is more than a bilateral spat. It represents a clash between the world's two largest economies. Their actions have far-reaching consequences. The conflict threatens to disrupt global supply chains. It could also undermine the rules-based trading system. The recent escalation is the culmination of months of tit-for-tat tariff increases. Let's break down the timeline. In February, the U.S. imposed a 10% tariff on all Chinese goods. They followed this with a 25% tariff on steel and aluminum. March saw a 25% tariff on cars and parts. Each time, China responded with retaliatory tariffs. These targeted key American exports like soybeans and automobiles. The situation reached a boiling point in April. The U.S. raised tariffs to 145% on April 9th. China responded with a 125% tariff on all U.S. goods the following day. This back and forth has created a climate of uncertainty. The escalating trade war has spooked global markets. Asian markets were hit particularly hard. Japan's Nikkei and Hong Kong stocks saw sharp declines. The U.S. stock market also suffered. The S&P 500 fell 3.5% after China's announcement. Economists are worried. Goldman Sachs predicts a 45% chance of a recession. This is directly linked to the trade war. The tariffs are disrupting global supply chains. They are also increasing costs for businesses and consumers. The average U.S. import duty rate is at a record high. This is hurting American businesses. They face rising costs for raw materials and components. Some are forced to raise prices. This could lead to inflation. The trade war has cast a long shadow over international trade. The World Trade Organization, or WTO, is struggling to mediate. The conflict undermines its authority. It also threatens the rules-based trading system. Some experts believe the trade war could last for years. They argue that neither side is willing to back down. Others hope for a negotiated settlement. However, talks have stalled. The situation is fluid and unpredictable. One thing is certain: the stakes are high. The outcome will have profound implications for the global economy. It will also shape the future of international trade.